What's up, everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen, and I believe that the best way to achieve financial freedom is through investing. In today's episode, I'm going to be going over my monthly M1 Finance portfolio review for March 2020. This is a portfolio that I started from zero to show you how I'm going to invest my first $1,000 and how I'm going to invest my first $10,000 and beyond in a small portfolio. If you're interested in seeing how my larger portfolios have been doing, check out my end of year 2019 portfolio reviews. In this video, I'm going to go over my results in my M1 Finance portfolio, and I'm going to go over the stocks I own in that portfolio. As a bonus, I'm going to go over 2 purchases I made outside of my M1 Finance portfolio to take advantage of the stock market correction. All this coming up. Here's my M1 Finance portfolio. My portfolio value is $521.02. You may see this fluctuate a little bit during this video because I am filming this during market hours. My monthly return is negative 16.34%, and my total return since I opened the account in August of 2019 is negative 16.99%. What a difference a month makes. As we all know, the stock market is in a correction. The S&P 500 is down over 10%, and that happened just over the past month. In my last portfolio review, my total return was positive 14%, and now, just 1 month later, my total return is negative 17%. Now, I'm a long-term investor with a time horizon of at least 10 years. So I see this as a buying opportunity. As many of you know, my overall strategy is to invest $20 every week into my Wolf Pie portfolio. And if the stock market goes into a bear market, with the S&P 500 dropping over 20%, then I'm going to double that investment to $40 every week. The S&P 500 almost hit bear market territory. I believe it went down as low as 19%, but didn't quite hit that 20% decline that I'm looking for. So back to the portfolio, the overall returns on all of my individual stocks, you can see here, most of my stocks have been getting hammered. Republic Services and Amazon have been holding up pretty well. The Trade Desk and Floor & Decor and Moody's are just about break even. And Xilinx, Broadridge, and Illumina have just gotten hammered. And for the month, all of my holdings are in the red. The Trade Desk, Paycom, Broadridge, Moody's, MasterCard, they're all down over 15% in the past month. In last month's portfolio review, I was considering lowering the target on Xilinx. Since then, I've decided against that. Xilinx makes FPGAs, and they're the market leader in FPGAs. And I have a bull thesis that FPGAs are going to be better than GPU chips when it comes to artificial intelligence inference. GPU chips are great at artificial intelligence training. And that's one reason that NVIDIA stock has done so well over the past few years. If I'm right, then I think Xilinx's stock is going to do really well. And if I'm wrong, I think that Xilinx is still a very good company. They are the market leader in FPGAs, and I think that they're going to continue making money selling FPGAs 10 years down the road and beyond. Okay, so now for the bonus. There are 2 purchases that I made in the last few days. The first one is a company that I purchased for my Roth IRA in my TD Ameritrade account. And that company is Fair Isaac Corporation, ticker FICO. You may know Fair Isaacs because if you've gotten a loan or if you've got a credit card, then you probably had to figure out what your FICO score was. Well, Fair Isaac created the FICO score. In this market correction, their stock dropped 20%, and I thought that was a good entry point to start a position. The second purchase I made was for my Fidelity Brokerage Link account in my 457 retirement. And that purchase was an ETF, the ProShares S&P 500 Dividend Aristocrats ETF, ticker NOBL. This ETF dropped approximately 16% from its 52-week high, and I thought that was a good time to start a position. The Dividend Aristocrats, as many of you may know, are the stocks inside the S&P 500 that have been raising their dividends every year for at least 25 years. So that's all for today's portfolio review. Tell me what you guys are doing in this stock market correction. Drop me a line in the comment box. And if you haven't yet, be sure to subscribe to the channel and click the like button. Thanks for watching, and I'll see you next time.